The world is finally about to change, and that's what we're going to get into in this video with the third iteration of the Domino Theory. So, a year and 3 months ago, I put out a video called the Domino Theory. And we went through a progression of events that would lead to the price appreciation of XRP, and there's been some changes that have occurred since then. Nothing to the main thesis of the video, but little nuances that I wanted to rehash here and make sure we're clear before this actually all plays out here in the near future. And I do think it will be in the near future. So let's get into why that is, what things are actually going to have to take place for this to finally play out, and what the outcome of it is actually going to be for people. So in the original video, we talked about, the reverse carry trade, Japan unwinding. We saw a little bit of that last year in August. I thought maybe that was when things were going to go, and sure enough, they kicked the can. We got the interest rates there in Japan stopped, rising quickly. People re-levered. We've got more exposure now than we ever have to the reverse carry trade, and we're set up for a global liquidity crisis, the scale of which people are going to have a hard time comprehending when this actually plays out. But it is going to lead to everything that people in digital assets, and in particular XRP, have been hoping for a long time. So we are here in June, early June of 2025. We have the stablecoin bill finally on the floor for voting next week. And I think that has been what has been the holdup for this to actually play out, and for Japan to kind of move the direction that we all know that they're going to have to at some point. The Fed has paused interest rates. The Bank of Japan has paused interest rates for more than 6-7 months here, holding things steady, kicking the can as far as they can, not having to print any more money. The Bank of Japan has, and they've, walked a line of their yen appreciating against the dollar and depreciating against the dollar, holding it between 140 and 160 yen to $1 US. They've obviously put yield curve control in place a couple different times. That only happens when sovereign currencies are at risk and governments have to step in to keep things from getting out of hand. And we've seen that. All of those things have played out, but we haven't got that spark, that thing that's going to kick things into overdrive the way that people have wanted. And I think that's going to be oil. So in 2014, and maybe even earlier than that, there was a confidant that the U.S. government brought in. Many of you may know him, Jim Rickards, to talk about how the dollar could be displaced as a global reserve currency. And they ran war games. And in one of those war games, Jim talked about the Strait of Gibraltar being shut down and global oil prices skyrocketed. And that was a catalyst for the Bank of Japan to aggressively raise interest rates because of the energy cost and the inflation that would happen in their economy. And I think that that's actually likely what's going to play out here. We have conflict in the Middle East. It hasn't exacerbated yet. It hasn't got to a problem where they're shutting down straits or cutting off supply chains, or oil has skyrocketed. But we've seen an uptick here in the last 2 weeks. Like, the oil companies know something. Their stocks have started to rise. We've seen WTI crude start to increase in price slowly but surely, nothing aggressive. And that's what we're waiting on. We're waiting on an aggressive move to the upside, 10-15% in a day, maybe more, that would be required for the Bank of Japan to start to see that they're going to have to intervene, and the only option they're going to have is to raise interest rates. But now that the stablecoin bill is on the floor, that's going to be okay. So let's play through this scenario. Something happens in the Middle East that causes a spike in oil. Obviously, oil companies are going to do well if that happens. And the problem with that is, again, energy costs in Japan are going to go up significantly in a very short period of time. The only way that the Bank of Japan will be able to combat that is to raise interest rates aggressively to quell the inflation that they're going to see. Japanese investors that have traditionally held U.S. Treasuries and bonds for the last 20-30 years will start chasing those returns. And with that, they will leave U.S. Treasuries, which is going to cause a problem. Japan is the largest foreign debt holder of U.S. Treasuries. And so a lot of those will flow onto the market. And if I were the BRICS nations or other outside competitors to the U.S., I would just double down on that. I would also divest my treasuries at the same time. Many people have called this Project Sandman. basically to spiral the dollar. But we have the solution here, and it's on the floor. It's the stablecoin bill. Stablecoin bill is predicted to cause a demand for treasuries around $2.3 trillion once it's passed for people issuing stablecoins here in the US. From enterprises like Google, Amazon, Meta, you got all of these large social media platforms that have bought up a bunch of payment licenses like X to be able to settle payments and transactions between the participants in their ecosystems. And then you've got traditional banks that would be launching stablecoins. Bank of America has already stated that as soon as we get stablecoin regulation, they will be launching their stablecoin. Citi, Goldman, BNY, you name it. All of these institutions will be rolling out their own stablecoin, and they may launch it on multiple networks. We've got USDC and Circle that have just recently gone public here, which was a big deal. Percent return on the first day last week when they went public. Big deal there. So stablecoins are here. Obviously, they've become very profitable. The banks, institutions, enterprises have seen that with Tether. Tether is the most profitable company in the world, even above and beyond BlackRock. And for the past 3, 4, 5 years here, they've been soaking up these treasuries as they've flown onto the market from foreign debt holders. As they've divested from the dollar, China and Russia both selling off large portions of treasuries onto the market, Tether has been the backstop for the Fed, not having to print more money to buy those treasuries here domestically. But with the stablecoin bill, Tether's going to have some problems. They've recently moved to El Salvador not too long ago, here in 2025. But with this stablecoin regulation, because it is a dollar-denominated stablecoin, they will be brought into the purview of the U.S. government. And because of the Bitcoin that they have on their balance sheet, they will not be able to be compliant. They've already moved away from Europe. We've had other exchanges such as Crypto.com delist them to de-risk from them. When we talked to MasterCard and Visa last year, they also mentioned that they do not use Tether, but they only use USDC. And now we have ROUSD that's been issued by Ripple that shows it's a proven model on how you should be going to market with a stablecoin. Audited, backed, verified, cash or cash equivalents that are backed one-to-one for the stablecoins that you're issuing on whatever chain, whether that's Ethereum, the EVM sidechain on the XRPL, Hyperledger, Solana, wherever your stablecoin's issued, you still need that one-to-one representation of value of the U.S. currency backing it. It cannot be another digital asset such as Bitcoin. And I don't know if there's going to be other allegations or other things made against Tether that will cause them to be able to sanction them or remove that liquidity from these exchanges, but I anticipate a freezing of accounts for Tether when the stablecoin bill is passed or a delisting across the board from U.S. exchanges, which will leave a big gap for liquidity in the market. It is the main liquidity source for digital assets, but at least the dollar will be okay because that demand that will come from institutions and enterprises for these stablecoins and issuance of those, they will be able to soak up the almost exact amount that's going to flow onto the market from these foreign debt holders around that $2.3 trillion mark. Just interesting how that all works out, isn't it? Kind of like it's coordinated. Who knows? So once that happens, it'll actually stabilize the debt market. I do think there will be a period of time where there is panic and chaos and people will be concerned about the US dollar's sovereignty and us being able to accommodate that. But I do think now that the bill is on the floor, it's likely that they will rush through that regulation separate of the Clarity Act, which is also being pushed now. I think the Clarity Act that will, show what is a security and what's not will end up being pushed out to sometime in 2026 before we see actual regulation on the entire crypto space. I think these payment networks and specific digital assets that facilitate the value movement of these stablecoins might end up getting first mover advantage over some of these other networks. And some of these have been held back by lawsuits. There might be one, right here that many of you I know, like, and love that are watching this video that has been suppressed or held back from its adoption with the lawsuit for the SEC, which is still just hanging out there, waiting on one more filing from the SEC and the judge's final opinion. Whether Ripple will be able to sell XRP to institutions or not. So we've got the reverse carry trade unwinding at scale. This is also going to cause sell-off across all markets. I know we got a lot of gold bugs that watch this channel. Love you guys. I'm a gold bug too. Love Austrian economics. Love Peter Schiff and Mike Maloney, Andy Scheckman, all those guys. But I hate to tell you, I think gold is going to take a hit with this one too. Across the board, stocks, commodities, bonds, it will not matter where your money is. There's going to be a mass liquidation as people rush to repay these loans in Japan when this occurs. They're going to sell off positions across the board. Gold, I think you could fall all the way back to around $2,200, $2,100, maybe even $2,000 per ounce. Does it get revalued on the other side of it? Who knows? I'm just speaking to a 30% drawdown across the board in almost all markets. Potentially even more than that, depending on what the limit down is and if they're able to roll out this solution we're going to talk about in the background to save the day. Okay, so you got huge pressure across all these markets. You got a liquidity crisis in traditional markets, and now you got it in crypto because they've sanctioned Tether or frozen Tether or delisted Tether across all these exchanges. And in the background, you've also got all of these ETFs that have been filed for spot ETFs for XRP waiting to be approved. Franklin Templeton's deadline is on June 17th here in 2025. And I anticipate that that could be maybe the day or even a little bit before that we will get approval across the board for these XRP ETFs if this plays out previous to that date. I'm still waiting on BlackRock to throw their hat in the ring. They did make a filing. Well, supposedly they made a filing back in November of 2023. They set up a trust, an iShares Trust XRP ETF. They're in Delaware, which was reportedly false or fake by Bloomberg, which was taken down. But I'm highly confident that that entity still sits there ready to go at any given time if they were to file an S1 for their XRP ETF. We'll see how quickly that could actually get pushed through if that were the case, if there were a crisis that needed to be averted. But that's the way they would move liquidity into XRP very quickly. There would need to be a supply shock on the existing XRP that sits out in the ecosystem. So people have a hard time with total supply versus available supply and market cap. The available supply for purchase for XRP is significantly less than the total amount. We've got 50% locked up in escrow by Ripple. They release $1 billion every month onto the market, and sometimes they only put out what they need to and they roll the rest of it back in on the backside, kind of like a treasury mechanism, because that's all the XRP that will ever exist. And there's actually less and less of it every single day because of the transactions on the network. About 5,000 XRP are burnt every day at the current rate. So with the limited supply that's available in the market, we're going to say somewhere between, go to the high side, 2 to 5 billion XRP available for purchase on the exchanges. Well, now, unfortunately for everybody else, these exchanges are going to need XRP. If you've ever read the Shane Ellis theory, if there was a liquidity crisis on Bitfinex, which is the largest trader of Tether and XRP futures, by the way, now that the CME has been rolled out, that's another precursor that was needed for this to happen. XRP futures allows people that launch the spot ETFs to hedge their positions. All of these large investment banks, that's a precursor. That's how it's rolled out every time for Bitcoin, ETH, and any other digital asset that's received a spot ETF approval by the SEC. Futures on the CME had to come first, and there had to be enough liquidity there to be able to support it. So if we saw Bitfinex have a liquidity crisis, in the Shane Ellis theory, that's what drives XRP to $589. A lot of people love that number, and that's where it comes from. So all these exchanges that are going to be tied to Tether that haven't delisted it or removed their necessity to be able to move value with it are going to have to look for something else. So they're going to be using their XRP for those reasons, and it's likely that they won't be selling it to the public any longer. So that constricts the supply even further. So now you have huge demand for these spot ETFs, people potentially divesting from their positions in Bitcoin ETFs because of the volatility in the market. A lot of people that have purchased these Bitcoin ETFs, pension funds, institutions, people that have put it on their balance sheet, MicroStrategy even, could also cause the problem. If they get to a point where they're going to get liquidated, then they will start divesting and selling off the Bitcoin as well. And it will be a negative spiral. We've not seen a 30 or 40% drawdown in Bitcoin since we've had the launch of the ETFs in early 24 for Bitcoin. And since then, we've seen a meteoric rise in its popularity, its visibility, its price, up over $100,000. And many people have continued to purchase it even above those levels, thinking that it's going to $1 million. Everybody thinks that that is a foregone conclusion at this point. And I'm not. So if we did see a 30 or 40 or 50 or 60% drawdown in Bitcoin back to, I think Bitcoin could drop as low as somewhere between $10,000 and $20,000 per Bitcoin. That's going to be a big problem for these pension funds, the spot ETFs, the investment banks, these sovereign wealth funds, these companies that have put it on their balance sheet. They're going to have huge unrealized losses from where they purchased it. And the only way they're going to be able to divest that real time on the back end of the stock market, specific for the investment banks, is to move to instant settlement. Well, it just so happens May 28th of 2024, they moved to T+1 for settlement between the clearinghouses and the brokers, with the option to settle real time via a digital asset if there's enough liquidity in it. So if you saw, and also I want to talk about the traditional rotation from Bitcoin into other assets. Traditionally, it's been on these exchanges that we've seen the rotation. Now the majority of the liquidity that is in Bitcoin is through these ETFs. And so the only way that you're going to get a rotation in traditional markets is to something else that exists in traditional markets. So if you had a meteoric rise and FOMO of XRP pushing the price higher, you might see a huge divesting or jump from Bitcoin into XRP, again, driving the supply shock and the price higher, all to support the back-end settlement of the stock market for them to be able to de-risk their positions in Bitcoin because of the systemic risk that now exists because of Bitcoin. 2 years ago, we didn't have that. Now we do. There are a lot of institutions, pension funds, sovereign wealth funds, treasuries, investment banks, like I mentioned before, that have pretty significant allocations to this asset. And if they weren't able to divest very quickly, Bitcoin trades 24/7, 365 within about 30, 40 minutes for settlement, whereas the back end of the stock market is T+1 next day. They could move to instant settlement and get out of those positions and also jumpstart the economy. The velocity of money would pick up substantially if we move to real-time settlement between counterparties on the back end of the stock market and for other applications. And you might ask, well, how are they going to do this? There's no way that stuff already exists. Actually, it does. In 2022, the DTCC finalized Project Ion, which was developed in correlation with R3 for the settlement, real-time settlement of the back end of the stock market using their infrastructure. R3 just happens to use XRP as its primary settlement mechanism if there's enough liquidity in it. So all of these things culminating all at once to drive the price of XRP from where it sits today to potentially 3 or 4 digits in a very, very short period of time, culminating in an event that would save the financial system, provide liquidity instantly when it was needed, and jumpstart the economy to make sure that we're able to recover from this black swan event that people they've known is coming for multiple decades because it's been set up. So that's my thesis. This is the domino theory. Hopefully this makes sense to you. So just as an overarching view here, we're going to get a spike in oil. This is my guess on how the Bank of Japan is going to be forced into a corner to raise interest rates. They will aggressively raise interest rates, which will cause the unwind or the reverse carry trade, which is tens of trillions of dollars have been borrowed from the Bank of Japan over the last 20 years and put to work across multiple markets around the world to be able to generate a return on basically free cash. Their interest rates were zero and sometimes negative at some points. So many pension funds, hedge funds, anybody that could borrow billions of dollars, including Warren Buffett, have done it from the Bank of Japan over the past 20 years. Tens of trillions of dollars will then look to leave all of those markets to be able to repay those loans all at the same time. It will be a catastrophic loss across the board in all of these markets. And on that, we will see a divesting of treasuries, which will cause Congress, the Senate, the House to rush stablecoin regulation through to be able to save the bond market and the dollar and drive demand here in the US for the flood of treasuries that come on the foreign debt market. So they'll stabilize that, but that will cause implications for Tether and crypto and Bitcoin and all these institutions, and they will roll out the ETFs to drive the price of XRP up substantially higher. The case settles with Ripple. All of this stuff culminates right at the right time for XRP to have the perfect storm to rise from around $2 today to hundreds or potentially thousands of dollars in a very short period of time to be able to provide liquidity in a liquidity crisis that you might call orchestrated. So if you found value in this video, if you think it's something different, if you want to add to it, please let me know in the comments below. Tell me I'm crazy. I'm happy with that, but I'm highly confident based on all of the people that I watch and the events that are currently transpiring that this is going to play out here in 2025. And many of us are going to be on the right side of history.